So welcome to the Voice of MPE. We are here at MPE 2026. We are discussing today one of the, I would say, most interesting topics in payments, which is the cross-border payments. And I couldn't imagine a better guest than Thunes. So I have here with me today Abhi Kumar, who is leading strategic partnerships for Thunes. So welcome, Abhi.
Thank you for having me, Kriaris.
Do you want maybe to tell us in 30 seconds a bit more in terms of what you do, and then we jump into the topic?
Sure. So at Thunes, we are a cross-border payment infrastructure company. We're API only. We offer a simple way for businesses and banks and enterprises to send money in a cross-border use case very seamlessly. That's the basic problem we're trying to solve. My role at Thunes is to develop our partnerships, which includes both technical as well as strategic partnerships like consulting companies, BaaS providers, and so on and so forth, to scale us and have more visibility with clients of those partners. So that's what my role is at Thunes.
I mean, it's, I would say, one of the key focus for companies like you, focus areas. Okay. If I go back to the topic, cross-border payments, I would say, have improved over the past decade, right? But if you compare them with local payments, with domestic payments, I think you do see still many inefficiencies. So if you can just give us an overview, why and what are the inefficiencies, and then we can maybe drill down on the details.
Yeah, happy to. So you're right. There's been a lot of improvements in cross-border payments, particularly with ISO 200.022 and all the standards to make connectivity from a data perspective much more better, so that institutions can speak with each other and
so they have the same protocol basically, right?
Correct. That's the idea behind those. But there still is a lot of inefficiencies. They are driven by a number of different reasons. The most important to me being payment layers that are quite different from each region. For example, in India, you've got a 4-layer infrastructure for identity, for data, for payouts, whereas in the US, you only have one predominantly. And so when you're trying to move money from the US to India, you are stuck with this. It doesn't fit the protocol from a data perspective. The standards don't work together. So then you have delays, you have compliance, what we call quarantines, where it's the money sort of parked in no man's land. And so those efficiencies still exist. Still, we have a much more sort of ubiquitous and interoperable system, which we still don't have. We're making progress towards it, but it's still, and you think about like somewhere like Australia, where they're introducing a third payment layer right now. So 3, 4, 1, you've got all these different payment structures that don't necessarily speak to each other. So it's very hard to be seamless when you're not having the same, even though you have the data standards, but the data itself from an identity, from a local acceptance perspective is not quite there.
And the main improvement that you have seen over the past years is the protocol that you mentioned, or what is the main improvement that you have seen over the past years?
The main problem is the hyper-localization of payment schemes within the major countries, and they all have evolved to be, like if you take UPI, for example, in India, they've got their own set of protocols that accepts their own standards, and you can't really pass a UPI ID from the US. So it's become harder, and the data has become more fragmented to send money across. And this is just purely the data perspective.
Yeah. But is there an improvement that you have seen over the past years, and in which direction?
Yes, the improvement, going back to the ISO standards, is that the standards themselves have now the ability to pass more richer data, right? So that's an improvement. You also have, obviously, we'll probably get into stablecoins, we'll probably get into digital.
Lots of discussion about,
we'll talk about that. We have local, like mobile wallets, which we at Thunes do quite well at. So an entire generation of population has skipped the banking evolution and gone directly to mobile wallets, particularly in places like Africa and APAC. So if you think about Philippines, Gcash is about 70% of all the money that's transacted in the Philippines today. So that's an evolution, because they are used to, as a consumer, real-time money in their wallets when they need it. And so when you do have that work out as your endpoint for the beneficiary, it's real-time, and that's a big improvement from going to a bank.
And we have to differentiate between B2B and B2C because that's a very different landscape. Right?
Correct. So for B2B, it's still a lot of it still happens on correspondent banking, traditional rails. So you have the same multi-hops and liquidity issues, which I'm sure we'll get into that as well. So you still have that. Big part of that is because they're high volume, whereas all the evolution of, say, mobile wallets or even stablecoin for that matter, or UPI we talked about, they are intended to be for micro transactions, for day-to-day QR. So it's a completely different setup, and that benefit hasn't really, transcended to B2B payouts.
Yeah. I mean, you mentioned the liquidity and settlement. So let's focus on this one, because I think this is probably one of the biggest issues when it comes to local businesses. If you look at the models that they have, some of them, they need pre-funding. You end up having a liquidity buffer, then you have settlement. So if you look at the end result, you have a large portion of your capital and funds sitting idle somewhere without lots of visibility. So how do you solve for that? I mean,
So let me just perhaps take a step back and explain
a bit better
why that exists today.
Exactly.
Right?
Yeah.
So I have a background in consulting. So I was just reading a report by one of the big four consulting companies that said that there's $20 billion worth of trapped cash just from going from a T+3 to a T+2 settlement. So
and that's a global number?
Global number from PwC as of, I think, October last year. So 2 trillion overall is trapped, but I think that also accounts for offshore tax, schemes and so
What's the timeline for this? What is
for the year? So as of a point in time in 2025, this was the number that they had put together. And a big part of that, while they may be for other reasons, such as for tax protection and what have you, that you parked in an offshore account, a big part of that is trapped liquidity. So let me break that down, why that happens. In a simple scenario where a business wants to make a payment to 5 different corridors or 5 different countries, you have to have a nostro vostro correspondent banking relationship, effectively saying we have a shared bank account that has a funding in that currency. They have monthly minimums, or they have a minimum balance that they need to have in that account. And so you basically have 5 different accounts with 5 different currencies that you cannot you can't go below a particular threshold. Now, if you do decide not to use that, the cost of withdrawing that money back to yourself is greater than the interest you would earn on if it was with you. So that's why people they just leave it. Once you put it in,
park it there.
It's just parked there. What we are seeing now, and we do this at Thunes as well, but we see this with a few others in the pre-funding model, a lot of folks are having a single banking relationship. So we do that at Thunes. For example, we would, instead of the 5 corridors, we would have one banking relationship, and you would pre-fund us in either stablecoin or fiat. And then we solve that problem where you don't have any minimum balance per se that you need to hold. So that's just the gist of what that liquidity problem is. There's also other problems, such as getting money out of places like Nigeria, Pakistan, Egypt, where the regulations are so strong on how money moves outside the country. So I think there's a famous example of Emirates Airline, who had collected so much naira that they couldn't get out of. They basically invested in the Nigerian economy without having an ability to get that money out. So again, that's trapped liquidity, and they had to stop flights because they're like, well, we just don't.
They didn't have anything to do with the funds.
So this is another example where it's not a nostro or a tax related trapped liquidity. That again is a cross-border problem to solve for.
I think you mentioned at the beginning that maybe we can focus a bit on these local payment systems. I think you mentioned, we have Alipay, we have WeChat, we have UPI, we have Pix. Why is it so hard to kind of connect those systems, and how do you approach this problem?
Yeah, it's actually a really relevant question here at MPE, because a lot of conversations that I'm having with merchants they're interested in UPI, they're interested, and I think my point of view may be a little bit controversial on this one, which is we have to understand why UPI or Alipay or Pix in Brazil exist in the first place. They are really they were instituted to move away from a cash-heavy society to a local C2C or B2C type of a scenario where they're doing, like, you want to buy a bag of mangoes or a bottle of water, and you use a QR code and you basically pay that in real time.
That's in China, the QR code.
Right. they're not great mechanisms, in my opinion, for cross-border payouts, because as long as the underlying bank where you're connected to your UPI is where you can get your money in from overseas, then it works seamlessly. So to me, it's harder to. So that's the general gist of what the setup is. In my opinion, the real problem stems from, again, some of the things we touched upon: local KYC, having a local entity, being compliant with local regulations, and these are all fairly nuanced systems in Brazil and India.
5 to 7 years.
Yeah,
right?
I mean, it's incredibly difficult to do this. And so on one hand, and I think that's the conversation I've been having at MP, on one hand, India and China probably leaders in this space from a scale perspective. But on the other hand, it is still today quite hard for companies that are not registered or not based in these jurisdictions to then have a UPI inflow with their merchant systems.
I mean, as we said, at the end of the day, these were not designed to solve this problem.
Correct.
You have, and also in terms of the timings, so for example, in China, they started 20 years ago.
Yeah, exactly.
And in PIX started, I think, 2016.
Yeah.
UPI.
Roughly the same time.
UPI is 2016 and PIX is 2020.
Correct.
So they were solving local problems, and now that you have to attach a cross-border element to this.
But let me also say that from a wallet scheme that is underlying. So again, it's not B2B, which was sort of, I guess, your original question, but from an end user perspective, and we use PIX as an example, we work with certain large businesses that are based in the States, where you have either like a host in a travel setup, or a freelancer, or a content creator, for example, that is based in Brazil. They can get paid on the PIX wallet from a US-based entity, and we support that kind of a money movement. So it's still not at scale at a B2B level.
And whose setup is this? Is this your setup?
It's where we've got direct connectivity into PIX. We've got, I think, about 550 different endpoints in our network globally, where we effectively bypass any correspondent banking setup. We can get into that if you're interested, but effectively pre-fund a wallet that we create for the business. And then on the other hand, we are connected to the local banking rails through our direct connectivity or through a provider aggregator. And so, for example, in China, as UnionPay, we can pay to, I think, 70 or 80 banks, as long as the underlying bank is connected to Union.
So you're basically doing all the things that someone would have to do on a standalone basis, and then that's the added value that you're offering.
Correct. And as I mentioned at the top, because we are a single API, a lot of the exhaustive road mapping of a big tech integration goes away a little bit. We've recently announced, I think yesterday, our partnership with Swift, which we have and does quite well. We've expanded that to also cover stablecoin wallets. And when we get to stablecoin, if that is something that is interesting to you, we can talk about like how that is an even better zero API solution, right? Because if you've got a big code and you work with Swift today for sending wire transfers, you can use the exact same mechanism and send money to stablecoin wallets or mobile wallets, PIX, for example.
Let's keep that for a moment, but let's discuss a bit. Let's focus on the integrations for merchants. So when you have businesses expanding internationally, I think they discover very quickly that every market is different, right? So you need to integrate individually. So how do you simplify this landscape so that merchants, they don't have to build dozens of separate integrations? Maybe a quick one on this so that we go to the
So I think again, it would just basically be the same as before, which is a single API. I would also add that I mean, Thunes in general, but also some others in particular, we offer both a collection, so we can collect. So if you're a merchant, and we have Grab as an example in Singapore, so we can collect for you that all the different payments that people are making using a Grab wallet instead of a credit card in Singapore. We can facilitate that collection. We can also use our payout rails to then disperse that to different drivers and delivery providers. So it's a holistic end-to-end solution through one integration for our pay and through whatever integration you need for different payment methods. But it's not case by case, a new integration.
Of course.
Each time you need a payment method, but that does exist today as well. So we're hoping to simplify that by giving you an ability. The last thing I'll say is, because we are offering 80 currencies to pay out, if you're a regional, say for example, you're a company in Singapore, but your regional parent company is in Hong Kong or in Australia, we can collect in Sing dollars, we can pay out in Australian dollars, USD, Hong Kong, whichever currency of your choice. So that's another benefit that we're doing for merchants to make it easy. Otherwise, it would have typically been collected and then a wire to your wherever it needs to go to. So it's all pretty seamless in our settlement process.
Okay, let's discuss a bit because that's one of the, I would say, main items in conferences like this and about stablecoins. So there is a growing discussion around stablecoins, and then you have CBDCs in the loop, right? So you have tokenized deposits. Maybe you can explain to us what's the relevance of these kind of, let's say, new models.
Yeah, happy to. So I would say maybe with CBDCs, it's quite a divided, and I'm sure you know this quite well. In the West, it is still fairly experimental and POC oriented. In the West, I think we are seeing some good traction, but it is still not at scale. And then you compare that with, say, China or with India, where in China with ECNY, you can actually get interest, right?
They were the first ones to
correct. And I think they are really leading the charge. So I think there it is equivalent to fiat. There is absolutely no difference. You can even earn interest, as I was mentioning earlier, on ECNY deposits and holdings. In India, it's a little bit still on the interbank settlement mechanism, and it's slowly rolling out to more on a consumer basis. So this is the CBDC's part. You had a question?
The question is, how does this solve for the problem? So if you look at the CBDCs, if you look at the stable coins, right? So maybe you can explain in very simple words why this is a milestone for the industry.
So stablecoin, I think a lot of people have to understand, is not exactly an asset. It is not an investment. It is basically a pegged digital currency that is pegged always to a dollar, or in the case of a euro, is pegged to a euro. It's basically a digital dollar, if you think about it. The reason it's useful to solve the problems actually we've just talked about is, one, it takes off the pre-funding lag. So typically, if you need to send money from the US to, say, Mexico, biggest corridor for US, right? You have to send it out on Friday, which means you have to pre-fund it by Wednesday. And that means Wednesday, Thursday, Friday, that money is neither yours.
It's a liquidity problem that we have been discussing.
Pre-funding we've been talking about. That goes away with stablecoin. You can pre-fund real time so you have all that locked capital becomes available for you to use as working capital. So there's a big liquidity problem that's solved. And because it's on ledger, it's all instant.
You don't have any of this.
Exactly. So that's the stablecoin payout that we solve for right now.
But do you see any actual use?
Yeah, we're seeing in places high adoption in places where access to liquid currency, particularly, say, Argentina is a good example, where access to US dollars is quite hard. And so there people prefer to then get paid in stablecoin. Another interesting use case, I was on a podcast a few weeks ago about this, was humanitarian aid, where people no longer have access to their bank or mobile wallets.
Yeah, that's a good one.
Displaced,
that's an interesting one.
So you now, as an example, a Ukrainian refugee in Poland, you have no access to your banking infrastructure, but stablecoin goes wherever you go. And so more and more of these sort of not-for-profit humanitarian agencies, we're having conversations with them to see how we can, support these payouts.
That's great. So two things maybe to close the discussion. So the first one, if we look at the future of cross-border payments, if we say that we discuss in 5 years from now, what would you say will be the key elements? So what the landscape will look like in 5 years time from now? What are you?
Yeah, at this probably the first 15-minute stretch in MP that we haven't talked about AI. So maybe AI is a big part of where I think it's going to get into like false positive reduction. So we're already seeing that at Thunes, for example. I think it's gone from somewhere around 6%, which is what banks have, to about under 1%, close to 0.5%. So things like that, agentic commerce we've not talked about, and I hear that somewhere in MP in conversations. So a lot of that will get proliferated, particularly for micro payments and smaller payouts to low risk or pre-approved suppliers or recurring payments. Things like that will become fairly agentic AI'd in the next, probably not even 5 years, if I'm honest.
Let's see.
And I think that's one trend. I think stable coins will become regional. So instead of now us having primarily one stablecoin, which is USDC, that's the most popular.
99%.
Right? So you're going to have like EURC, USDC, and then so now instead of people like us doing currency FX from US to Euro, we'll probably do USDC to EURC.
But let's see what the market share is going to be. But okay. Last question. If you had to name one pain point that would improve cross-border, what would that be? Very quickly. Technology, regulation, something else, infrastructure, for example, what would that be
I would say infrastructure. I would say interoperability is the biggest pain point. That's how we started the chat. It remains the biggest barrier. We have lots of gaps and blind spots.
Makes sense. Yeah. So the same way that we started, the same way we closed it.
Yes, indeed.
Okay. Thank you very much.
Thank you.
It was very useful. Thanks for having us. Thank you.